Inflation across the world is showing no sign of slowing down. The U.S. Consumer Price Index, which is a broad measure of everyday goods and services related to the cost of living, has soared 9.1% from a year ago.
This is the biggest in 40 years. Worrying news for U.S. households amid the skyrocketing cost of living and worries over another Fed interest rate hike. Hyo-sun has our top story.
The U.S. Consumer Price Index has jumped a whopping 9.1% from a year ago in June, leading to shoppers paying sharply higher prices for a variety of goods. According to data released Wednesday by the Bureau of Labor Statistics, this marked the largest 12-month increase since November 1981. The CPI, which measures changes in prices of goods and services from a consumer's perspective, came in much higher than the market estimate of 8.8%. On a monthly basis, the index rose 1.3% in June from the previous month. While the price of gasoline was one of the largest contributors to the surge, experts point out how this had a fast spillover effect across many other sectors.
I think what's surprising is, like I said, just how dramatically those elevated gas prices and energy prices have flowed throughout the economy, particularly when we go look at food is another sector.
The core CPI, excluding volatile food and energy, increased 0.7% in June from the previous month, again above the market expectation of a 0.6% gain. Pundits say such inflation levels could push the U.S. central bank into an even more aggressive position. Against this backdrop, the euro dropped below the U.S. dollar for the first time in nearly 2 decades. A weakening currency will make imports more expensive for Eurozone countries, especially goods priced in dollars, such as crude oil. This ultimately could contribute to even higher inflation in the Eurozone, which is already running at 8.6% for June. Hyo-sun, Arirang News.